Welcome and a very good day everyone. My name is Muzaki Buzman. Today we will be discussing the taxation framework for cooperative societies in Malaysia, specifically focusing on how tax is treated and what deductions are available. First, it is important to understand the foundation. A cooperative society is formed for the mutual economic benefits for its members. It's governed under the Cooperative Societies Act 1993, and for tax purposes, it falls under the Income Tax Act 1967. Just like other companies, cooperatives are required to file Form C every year for the Inland Revenue Board (IRB). However, unlike ordinary companies, co-ops may receive partial tax exemptions under paragraph 12 of Schedule 6, especially during their early years of operation. Later, my friends will brief for details. Once any available exemptions are applied, the remaining income is taxed at the normal corporate tax rate, just like a regular business entity. Now, let's look at the purpose of special tax deductions for cooperatives. In Malaysia, a co-op typically enjoys full tax exemption for the first 5 years after registration, but after that, they are no longer automatically exempt. To support their operations and encourage further growth, the government allows certain special deductions under the tax law. These deductions are designed to reduce a co-op's chargeable income, which ultimately lowers the tax payable. They also encourage for cooperatives to reinvest in their members and the community. There are two key types of special deductions. First, deductions for amounts transferred to approved funds, such as deductions or development trust funds. Second, co-ops can deduct up to 8% of their members' fund based on the value at the beginning of the basis period. In short, these incentives are not just about saving tax, they reflect the government's recognition of the social and economic role played by cooperative societies.
Hi Madam, Assalamualaikum. My name is Nuruzula Kadamia. I will present about exemption under Schedule C of the ITA 1967. First, for the we have two situations. First one is first 5 year. A newly registration cooperative society is exempt from tax on any income from a period of 5 year commence from the date of registrations. And the second one, after 5 years, a cooperative society which has been registered for more 5 years is exempted for tax only if it's a member fund as the first day of the basis period for the assessment is less than 750,000. This example for exemption 5 year for cooperative society. We can see when enough for 5 year is equal to 60 months, so all of income will be exempted. Next, I will share about accessibility of receipt. I have 3 examples that maybe we must do taxable or not in a cooperative society. First one, business income must be taxable during a non-exempt period, and the second one is investment income, like rental income will be taxable if corporate society is not tax exempt. And the last one, contribution by members, including entry fees, member fee, and subscription. It will be not income for the cooperative society, so we will not be taxable.
Assalamualaikum and hi everyone. My name is Irene Fadila binti Azwa and my matrix number is 2024390685, and I will be explaining about the special deduction available to cooperative societies under section 65A of the income tax. Okay, What is a special deduction? A special deduction is an additional tax benefit granted to cooperative societies to help reduce their chargeable income. This incentive plays an important role in supporting the growth and development of cooperatives, especially after they are no longer eligible for full tax exemption following the first 5 years from their registrations. There are two types of special deductions which I will explain next. Okay, type 1 is amount transfer to approved funds. The first type of special deduction is allowed when a cooperative transfer or contributes part of its profits to any of the following 5 approved funds. The first is statutory reserve fund. The second one is educational institution. The third one is cooperative organization. The fourth is cooperative education trust fund, and the lastly is cooperative development trust fund. Okay, so the important is the transfer must be made during the basis period of the relevant year of assessment to qualify. Okay, so I give one example. If a cooperative contribute 10,000 to the cooperative education trust fund during the year, that amount can be deducted as a special deduction when calculating chargeable income. Okay, the second type of deduction is based on 8% of the members' fund as at the first day of the basis period. The members' fund includes the following 6 components. The first is paid-up capital, excluding bonus share from capital reserve revaluation. Second is statutory reserve fund. The third is other reserve, excluding capital reserve cleared from asset revaluation or provision. The fourth is share premium account, excluding premium from bonus share issued from capital reserve. 5 if appropriate profit, and 6 is proposed dividends and provisions for taxation. Okay, for example, if a co-op has 500,000 in its members fund at the beginning of the year, it can claim a deduction of 8% from that amount, which is we get 40,000. Okay, next, even if a cooperative qualify for both type of deductions, the total allowable special deduction is limited to 25% of the audited net profit for that year. This means special deduction allowed lower of total of both deduction or 25% of audited net profit.
Assalamualaikum. My name is Putri Karinsa Nabila binti Rozali. So today I will be discussing on the tax treatment applicable to the cooperative societies in Malaysia. So that is focusing on specifically on dividend payment, interest payment, and real property gain tax (RPGT). So the cooperative societies in Malaysia are legal entities registered under the Cooperative Society Act 1993. So they are overseen by SKM, and aim is to improve the economic well-being of the member. So for taxation, they fall under the provisions of the Income Tax Act 1967. So the co-ops are required to file Form C annually with LHDN. While they are taxed similarly to companies, they may qualify for partial exemption under the paragraph 12 of Schedule 6. So example on the lawsuit on the paragraph 12 Schedule 6 is first the Lower Perak Cooperative Housing Society Berhad versus Ketua Pengarah Hasil Dalam Negeri. So this case examines the tax exemption applicable to cooperative societies, affirming their status under the Income Tax Act. So this case that involves subsection 33 subsection 1 in paragraph 60FA subsection 3AI, the section 110 and paragraph 12B of Schedule 6. That is focusing on interpretation and application of a tax provision in specific circumstances. Dividend paid by co-ops to the member are tax exempt under the section 127 subsection 3 subsection B. These payments are also deductible for the co-op under section 63, which reduce their taxable income, that no withholding tax apply. For the example of the lawsuit section 127 subsection 3 and B, First is D. Pristine Medin Sujan Berhad versus Director General of Inland Revenue. So this case is involved a dispute over the eligibility for tax exemption under the Section 127, Subsection 3 and B, where the court examined the criteria for qualifying project and the authority of the tax authorities in granting the exemption. So interest paid on a member's saving is not taxable to the member and can be deducted by the co-op. However, interest to non-member may attract the withholding tax. The co-ops must submit the Form C annually and ensure the reporting of the dividend interest and RPGT-related transaction. RPGT form must be submitted within 60 days of the disposal property. And dividend and interest payment to the member are mostly tax exempt and RPGT applies to the property sales. The co-ops can reduce their tax liability by claiming the deduction of this payment. So the example of the lawsuit on RPGT is Ketua Pengarah Hasil Dalam Negeri versus Tower Real Estate Investment Trust. This case examined the application of RPGT in the context of real estate investment, trust, and the implication of tax assessment on such entity. The co-ops must submit the Form C annually and ensure the reporting of the dividend interest and RPGT-related transaction. RPGT form must be submitted within 60 days of the disposal property. And dividend and interest payment to the member are mostly tax exempt and RPGT applies to the property sales. The co-ops can reduce their tax liability by claiming the deduction of this payment.
Assalamualaikum. My name is Saratu Munira binti Abdul Jalil. I will explain about computation of taxable income. The formula to get taxable income is A minus B minus C, we get D. A stand for total income, B stand for amount paid during the basis period to a statutory reserve, cooperative organisation, educational institution or trust fund as required under cooperative society law in Malaysia. C stand for an amount equal to 8% of member fund as at the first day of the basis period for the year assessment. D stand for taxable income. I will give example for the computation of taxable income. The question is, the PAAC society was registered as a cooperative society on 1st January 2010. The following information has been extracted from its account for the relevant year. Required compute the taxable income for the year of assessment 2017 and 2019. The answer for this question is, based on the above, the income for the year assessment 2014 within 5 years are exempted from the common seaman date of registration, and year assessment 2017 member fund are less than 750,000. So, the PAAC society are exempted from tax. Meanwhile, for the year assessment 2019, the total income is 700,000 minus with payment to cooperative educational fund is 160,000 minus with 8% of the member fund is 68,800. We get taxable income amounting 471,200.